In addition to protesting, people are being encouraged to donate to organizations that advocate for social justice. Also, because of coronavirus, nonprofits had to cancel a lot of their big fundraisers, so they're depending on online donations as well. But scammers are also depending on you to mess up. So, certified financial planner Graham Williams is joining us this morning to help you invest and spend your money smartly when it comes to giving to these organizations. Hi, Graham. Good to see you again.
Good morning. Good morning, Anoy.
So let's start with the things that people should be paying attention to when they're choosing who to donate to.
Right. So on our website at Optimist Retirement, we have links to the Federal Trade Commission and other sites where you can vet a potential charity. And we think you should really start with that because we're going to talk about scamming in a little bit, but it's really bad right now with the coronavirus issues. So the first thing you would do is you want to choose your charities and then research them. And one of the things we always recommend people look at is how they spend the money. So we want to see them spending 65% or more of the money they receive on the actual charitable activities versus fundraising, which is a big cost for many of these organizations. And now it's even harder to raise funds, so there's a little more going on in the internet that we might not like. So you definitely want to do your homework.
What about red flags to look for when you choose an organization that might set off the alarms that this is a scam?
Okay, so when you're looking for a charity in this case, one of the first ones we see is similar names. So you have something you want to give to and you see something with a similar name or you get an email with a similar name. Be careful of that and any links in an email because those could be scams. Obvious things that you want to look for too is pressure. Pressure to give money, pressure to send a wire, right? Or pressure to give cash. Anything you're going to do, you want to do it where there's a paper trail. You want to use your checking account. You want to write the charity name on the check and if they have an ID number and so on. And I would always recommend that before you give, you might give them a call or go to the website to confirm that this is in fact the charity you think you're giving to.
Yeah, more and more it is on us to do our due diligence.
Right, right.
Also, with the coronavirus, for the organizations themselves, especially nonprofits, there has been some help for them and some redirection.
Right. They have gotten help from the government under the CARES Act with payroll and issues to try and stay open so that they can continue to operate. Now, also as individuals, the CARES Act, which you remember passed back in March, has some features that can help us as well. So the first thing is that if you want to give money to a charity, you can have an above the line, as we say, deduction. So it's about $300 because most people today under the new tax law do not itemize. And you remember that you have to itemize to deduct your charitable contributions. So there's $300 above the line. The other thing that came out of the CARES Act for perhaps we might say wealthier people is that you can actually now give 100% of your income to charity. So let's say you made $50,000, but you had plenty of money and you wanted to give $50,000. Is now, if it's done properly, you could give $50,000 and wipe out your tax liability this year by giving it to charity.
And you also mentioned, in addition to doing your own paper trail, this is also the time to plan ahead if you do donate for your own tax purposes.
Right. I highly recommend that because the law has changed, it's very important to talk to your tax advisor or your financial planner about a donating plan. At Optimist, we believe that you should have this as part of your financial plan, who you're going to give to, because you want your plan to reflect your values. And you must make sure if you're giving, for example, if you don't itemize and you give more than $300, you aren't going to get any tax benefit for that. So you have to talk with your advisor about whether you're planning to itemize or not. If you're going to give beyond $300, I'd suggest that.
Graham Williams, Optimist Retirement, thank you so much always for helping guide us so that we spend and save our money wisely.
My pleasure, Noe. Thank you.